protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome in to Money Unleashed with Chris Hoffman. We appreciate you checking out the podcast. New episodes come your way on Monday and Friday each and every week, so make sure you're subscribed wherever you get your podcasts. And of course, you can catch Money Unleashed every Sunday on 95.5 WSB in Atlanta. Tune in for 2 great hours of conversations geared toward getting you thinking about your financial present, your financial future, and ways to help you build the retirement you want. That's every Sunday on 95.5 WSB from 11 a.m. to 1 p.m. Now, Chris, as I was doing my reading and preparing for this show, and there was a lot of it, I was brushing up on recent market events. And yes, we've seen some volatility out there, and considering the highs of the past couple of years, turbulence and uncertainty may be words that haven't really been in our vocabulary. But as we know, and history tells us, there are going to be ups and downs in the market. And when we have those downs, they can present that opportunity to do some buying. So it's a sale. That got me thinking, which could be dangerous here, but people love a good sale. I know I do. Oftentimes, we talk ourselves into buying things for that reason alone, because we're getting a deal. So my question is, why is it when the market dips that some people can't run away from that sale fast enough?
I mean, you draw an amazing parallel or whatever you want to call it to the fact that if you were to go shop for a new car and they said we're having a 50% off sale, it wouldn't take you long to get a new car.
Where do I sign?
Yeah, exactly. But for some reason, if stocks are down 50%, everybody's panicking.
Oh, no.
They're running for the exits.
Yeah.
Folks, I'll tell you, in the olden days, they called it odd lot trading. We were the odd lot because we were the small investors, and the financial institutions would watch us buying these 20 share orders, 100 share orders, and they would be like, if the odd lots are selling, we're buying. Mm-hmm. If the odd lots are buying, we're selling. Well, we've all done a ton of buying over the past 10, 12, 14 years. Now is not the time to start to panic and sell everything in your portfolio.
Right.
It is certainly a time to assess what holdings you have and will those holdings outperform the overall market. That's the name of the game. Beat the market every year. Somehow, some way. That's what our mission is. In the very, very good years, it's not okay for my team to say, well, you were up 20% last year when the market was up 25 or 30. That's not acceptable. It's also not acceptable that if the market goes down 10 or 20%, for us to say, well, you lost 10 or 20%.
Yeah.
Now, that goes back to our earlier discussion about full financial planning. If you're meeting with your advisory team on a quarterly basis, which we actually automate and send you texts, we send all of our clients texts. You can meet with us via Zoom. You can meet with us in one of our 7 locations, et cetera, et cetera. You can open your advisor's calendar to book that meeting. If you're not doing that with your current advisory team, I'm worried you're being ignored. I'm worried that they are waiting for Trump's economic policies to take hold, for the market to figure it out. And guess what? When the market figures it out, it's too late.
Yeah,
you're now
behind.
Yeah, you're way, way, way behind. And in this world, information gets out to us so quickly that it's very hard to stay ahead of the markets. So you've got to meet with us quarterly. We've got to talk about not just what has transpired over that quarter, but what we're seeing next quarter and 6 months out, et cetera, et cetera. Now, let's move on to looking at your entire portfolio top to bottom and rebalancing it appropriately based on what we believe to be in front of us for the next 6 months to 9 months. That's the key. And that's where good advisory teams turn into great advisory teams, when they're able to read the tea leaves and give with some predictability a clear consensus on where they believe not just the markets are headed, but where individual asset classes are going to go. Up, down, sideways, high interest rates, low interest rates, offset by inflation. introducing additional asset classes and investment solutions. That engagement with our clients, I believe, pays dividends. No pun intended. Dividends can also be a powerful way to invest because, although not guaranteed, a lot of those dividends are highly reliable and they will create a distribution that you can live off of if the market starts to fall. So look at it this way, folks. If you build a financial plan and you live off of the dividends and interest and Social Security and pension, et cetera, without invading principal, if the market's up substantially one year and you made 20 or 30%, you can do whatever you want with that money. We can send it to you. You can fly around the world. You can spoil the grandkids. You can sell your primary residence and move to the beach or move to the lake, whatever you want to do. In the years where there is pressure on the portfolio, you can basically ride through it as long as we are beating our benchmarks and losing less than what the market's losing, because you've got that income coming in that you can live off of. And I'm not talking about just filling the grocery cart. I'm talking about living expenses, including $10,000, $20,000 events per year. That's the difference in an actively managed investment portfolio and an actively managed financial plan versus what I think Wall Street and the big box firms don't provide their clients. So that's a little bit about how we look at this market right now. We are not going to panic if this market settles down. We are going to be prepared to take advantage of it.
Well, as always, a lot of really great information for our listeners to take in. But Chris, I think the question now is, what can they do to take action? How do they take advantage of these times and these strategies?
It starts with, you've got to pick up the phone or go online. I can't force you to do that. When the timing is right, please pick up the phone, call 404-341-6767, or go to unleashyourmoney.com and you'll see the options there. The first step of our process is to do a portfolio x-ray or a 401k x-ray. Typically, what we find is there are 2 or 3 golden nuggets of opportunity inside of that. After you've gotten that 401k or that portfolio x-ray presented to you, then we can turn it into generating an income plan. And that income plan will have tax strategies. Then we fold it into the fuller retirement plan. How much do you need to participate in that? You just need to pick up the phone and call us. And it's about a 10-minute conversation on Monday or Tuesday as a follow-up. And then we get to work. When you arrive, you get these free of charge in writing for you to assess. It's an opportunity to put us to work, free to you, for you to make sure that your financial world is sound in these uncertain economic times.
All you have to do is pick up the phone and make that call to get started. 404-341-6767. That's 404-341-6767. Or sign up online at unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.